One of the ways that you could invest your money is through collective investment schemes. Money market funds are a type of collective investment schemes and are a perfect, easy, and low-risk investment for beginners and has many other advantages that I will tell you about in this video. My name is Agatha from the Wealth Tribe, and this is where we learn how to build wealth together. Think of yourself, Rabin, Ellie, Charlo, Edith, and Agatha putting your money in one account and giving it to a professional fund manager to invest on your behalf. That is simply what collective investment schemes are, and that is simply what a money market fund is. There are two types of collective investment schemes in Kenya: mutual funds and unit trust. Mutual funds are collective investment vehicles made up of a pool of money collected from many investors governed by a company act, just like a normal company. Mutual funds, unit trusts are investment vehicles made up of a pool of money collected from many investors governed by a trustee act, and I will explain what that is later in the video. You may not come across mutual funds in Kenya. You'll mostly interact with unit trusts. Keep in mind that both mutual funds and unit trusts operate in the same way, but the purpose of this video is to explore unit trusts or money market funds. As shown in the flow chart, there are three types of unit trust. Money market funds, the most common, which is the most common type of unit trust in Kenya. Equity funds, these primarily invest in shares or stocks. Then there are bonds and fixed income funds, and these primarily invest in government bonds. And finally, we have balanced funds, which primarily invest in both shares and bonds. They are a balanced fund, as the name suggests. We will now focus on money market funds, but I will do subsequent videos where I will teach you how to invest in equity funds, balanced funds, and bond and fixed income funds. A money market fund is managed by a professional fund manager. The fund manager invests your funds or the pool of funds from different investors into three asset classes, and these asset classes are commonly referred to as money market instruments. These three money market instruments are commercial paper, and commercial paper is usually issued by a corporation or a company to finance short-term cash flow needs. Or a treasury bill. Another way a fund manager invests your money is in a treasury bill, and a treasury bill is where you lend your money to the government. And then the last way that your money is invested is in a fixed deposit, and these are deposits in commercial banks. These three types of asset classes are short-term instruments. And another way to think of it of money market fund is think of it as a big pie. When you buy a unit or units of the money market fund, you are essentially buying a piece of the pie that includes the three asset classes that the professional fund manager is investing in. So you're basically buying a pie of commercial paper, a pie that has commercial paper, a pie that has treasury bills, and a pie that has fixed deposits. It's the same way you bake a cake and put different ingredients together. When you think of it that way, then it's easy to understand what a money market fund is. The professional fund manager has a job to allocate the pooled funds from investors like you into these three different baskets, so that they can have capital gains or income for you as an investor. And the reason as to why I'm referring to them as professional fund manager is because they have to be approved by CMA. And CMA in full is the Capital Markets Authority, and the Capital Markets Authority is a government governing body that regulates such companies and such companies that collect money from different investors. Why should you invest in a money market fund? First, because it's a low risk investment, which makes it safe. which means that you won't have sleepless nights thinking about your investment. Nobody wants to think about the possibility of losing their investment overnight. With a money market fund, you're sure that your money is safe. Also, there's low barrier to entry, and by this I mean that you only need as low as 2,500 shillings to start investing in a money market fund. In fact, of late, there are many money market fund companies who allow as low as 1,000 shillings or even 100 shillings to begin investing in a money market fund, which means that includes you, I, and everyone who is part of the Wealth Tribe can start investing in money market funds.